What if I told you that $1,000 invested in the Nasdaq-100 in 1985 would be worth over $183,000 today? This isn't hype, it's the power of tech innovation, compounded over time. The Nasdaq-100 isn't just an index. It's where Apple, Microsoft, Nvidia, Amazon, and Meta were born into the market. In this video, I'll break down what the Nasdaq-100 really is, why it's dominated for 40 years, and how you, yes, even as a beginner, can invest in it wisely. Don't just watch the markets. Understand them. Nasdaq stands for National Association of Securities Dealers Automated Quotations. National Association of Securities Dealers, ASD, is the regulatory body that founded Nasdaq in 1971. It was born with a high-tech DNA. It is called automated quotations because Nasdaq was the first fully electronic stock exchange. It used computers to quote prices instead of trading on a physical floor. The Nasdaq Composite includes over 3,000 companies of all sizes listed on the Nasdaq exchange, covering a broad range of sectors, including financials. In contrast, the Nasdaq-100 focuses only on the 100 largest non-financial companies, making it more concentrated in tech and growth stocks. While the composite gives a broad market view, the Nasdaq-100 highlights the top-tier innovators driving market performance. The Nasdaq-100 includes the 100 largest non-financial companies listed on the Nasdaq exchange, with a strong focus on technology and innovation. In contrast, the S&P 500 includes 500 of the largest U.S. companies across all sectors, offering broader industry diversification and a more balanced view of the overall U.S. economy. While the Nasdaq-100 often delivers higher growth, the S&P 500 is generally less volatile and considered the standard benchmark for long-term investing. The Nasdaq-100 index tracks the 100 largest non-financial companies listed on the Nasdaq Stock Exchange. But not just any company can make the cut. It must meet several strict criteria. First, the company must be listed on the Nasdaq exchange. Stocks traded on the NYSE or other exchanges are not eligible. Second, it must belong to a non-financial sector. That means banks, insurance companies, and other financial firms are excluded. The index mainly includes tech, biotech, retail, and industrial companies. Third, the company must rank among the top 100 non-financial Nasdaq-listed firms by market capitalization. This is based on float-adjusted market cap, which excludes insider-owned shares. Fourth, it must meet liquidity standards, including strong trading volume and public float. And of course, it must meet Nasdaq's minimum listing requirements. Fifth, there's usually a seasoning period. Companies must be listed on Nasdaq for at least 2 years, though there are occasional exceptions. And finally, the index is rebalanced quarterly, in March, June, September, and December. Companies can be added or removed based on whether they continue to meet these requirements. This ensures the Nasdaq-100 stays fast, focused, and full of market leaders. The Nasdaq-100 is home to some of the world's most influential and innovative companies, spanning a variety of sectors. Dominated by technology giants like Apple, Microsoft, Nvidia, and Alphabet. The index also includes leaders in consumer discretionary such as Amazon, Tesla, and Costco. In healthcare, firms like Amgen and Gilead drive biotech progress, while communication services feature Netflix and Comcast. Other sectors, like industrials, utilities, cybersecurity, and consumer staples, are represented by standout companies like Honeywell, Xcel Energy, Palo Alto Networks, and PepsiCo. The Nasdaq-100 index is calculated using a modified market capitalization-weighted formula. Each company's influence on the index is based on its stock price multiplied by the number of float-adjusted shares outstanding, then adjusted by a weighting factor to prevent any single company from dominating. All components are summed and divided by a divisor, which is regularly updated to account for stock splits, dividends, and index rebalancing. This method ensures the index reflects both market value and diversification. The Nasdaq-100 index is heavily dominated by the technology sector, which makes up approximately 56% of the total index weight. This includes software, hardware, and semiconductor giants like Microsoft, Nvidia, and Apple. Consumer discretionary and communication services follow, accounting for about 15% and 13% respectively, with major players like Amazon, Tesla, Alphabet, and Meta. Other sectors such as healthcare, industrials, and utilities make up smaller portions. Notably, the index excludes financial companies entirely, reinforcing its strong focus on innovation, tech, and growth-driven sectors. Over the past 20 years, the Nasdaq-100's top 10 companies have undergone a dramatic transformation. In 2005, the list included a mix of tech and legacy giants like GE, ExxonMobil, and Intel, with market capitalizations typically under $400 billion. By 2025, the top 10 are dominated by mega-cap tech titans such as Microsoft, Apple, Nvidia, and Alphabet, each boasting market caps well over $1 trillion. The only company remaining in the top 10 from 2005 is Microsoft, a testament to its remarkable resilience and adaptability. As of July 11, 2025, Nvidia's market cap has surpassed an astonishing $4 trillion, while the once dominant Intel has fallen far out of the top 10, with a market cap of just $102 billion. This shift reflects the explosive growth of the digital economy, including cloud computing, AI, and e-commerce, along with investors' increasing preference for innovation-driven, asset-light business models. The Nasdaq-100 has evolved from a tech-heavy index into a super-concentrated showcase of global digital leadership. In 1985, the Nasdaq-100 began at just 125 points. Fast forward to mid-2025, and the index has soared to roughly 22,865 points. That's an astonishing price-only gain of about 183 times in 4 decades, equivalent to a compound annual growth rate of nearly 14%, even before dividends are counted. Over the past 4 decades, the Nasdaq-100 has seen remarkable growth, but not without major corrections along the way. Let's take a quick tour through the 6 biggest downturns from 1987 to 2025. First, in 1987, Black Monday struck. The market plunged 35% in a single day, triggered by panic selling and early automated trading systems. Then came the dot-com bubble burst from 2000 to 2002, when overhyped internet stocks collapsed, dragging the Nasdaq-100 down by a staggering 83%. In 2008 and 2009, the global financial crisis hit, wiping out 52% of the index's value as the banking system teetered on collapse. March 2020 brought the COVID-19 crash, a sudden, sharp drop of 30%, fueled by global shutdowns and economic uncertainty. In 2022, soaring inflation and aggressive rate hikes by the Federal Reserve sparked a 35% sell-off, especially in tech-heavy stocks. Most recently, from February to April 2025, a new wave of fear gripped investors. Concerns over AI infrastructure bottlenecks and sweeping U.S. tariffs triggered a 22% decline in the Nasdaq-100. These downturns remind us that while innovation drives long-term gains, volatility is always part of the journey. Over the past 40 years, from 1985 to 2025, the Nasdaq-100 has faced many downturns, but it has consistently bounced back stronger. So, what makes this index so resilient? Here are the key factors driving its long-term growth. First, innovation-driven companies. The Nasdaq-100 is led by tech giants like Microsoft, Apple, Nvidia, Amazon, and Alphabet. These firms invest heavily in research and development, consistently creating new markets, from cloud computing to AI, mobile, and e-commerce. Second, high earnings growth and margins. Nasdaq-100 companies typically enjoy strong revenue growth, scalable business models, and high profit margins, giving them the ability to rebound quickly after market shocks. Third, global market reach. These companies operate worldwide, generating revenue from multiple regions. That global diversification helps cushion them against localized economic downturns. Fourth, the shift toward a digital economy. As the world moves toward digital infrastructure, automation, and data, the Nasdaq-100 stands at the center, making it a magnet for both retail and institutional investors. Fifth, capital efficiency and asset-light models. Many of these firms, especially in software, run lean and scale fast. Their asset-light structures make them more adaptable during economic stress. Sixth, index composition and rebalancing. The Nasdaq-100 is rebalanced quarterly and reconstituted annually. Underperformers are removed and high-growth newcomers are added, keeping the index forward-looking and dynamic. And finally, strong buybacks and cash reserves. Big tech companies often hold huge cash piles and buy back their own shares, helping to stabilize stock prices during downturns. In summary, the Nasdaq-100 thrives over the long term because it constantly evolves, driven by companies that innovate, grow fast, and lead the digital future. Want to invest in the Nasdaq-100, the index behind tech giants like Apple, Microsoft, and Nvidia? Here's how in 6 simple steps. Step 1. Know what you're investing in. The Nasdaq-100 includes 100 of the largest non-financial companies on the Nasdaq exchange, mostly tech-driven. Step 2. Pick your vehicle. ETFs like QQQ or QQQM are the easiest way. Mutual funds work too, but ETFs are more flexible. Step 3. Open a brokerage account. Use platforms like Fidelity, Vanguard, Schwab, or Robinhood. Step 4. Decide your budget. Start small or set up recurring investments. Dollar cost averaging is your friend. Step 5. Reinvest your dividends. Let your money compound over time. Step 6. Think long-term. The Nasdaq-100 is volatile, but long-term growth has been powerful. Want to invest in the Nasdaq-100 but not sure which ETF to pick? Here's a quick breakdown of the top choices. QQQ, the most popular Nasdaq-100 ETF. Great for both traders and long-term investors. QQQM, same stocks as QQQ, but with lower fees. Ideal for long-term holding. QQEW, equal weighted. Spreads your investment evenly across all 100 stocks, not just the tech giants. TQQQ, a 3 times leveraged ETF. Triple the gains or the losses every day. High risk, short-term only. SQQQ, the opposite. It's a 3 times short ETF. Profits when the Nasdaq-100 drops. QYLD, focuses on monthly income. Sells covered calls on the Nasdaq-100. PSQ, a simple 1 times inverse ETF. Used to hedge or bet against the index. Choose the one that fits your strategy. And remember, leveraged ETFs are not for the faint of heart. Did you know just one stock beat the entire Nasdaq-100 by over 700 times? In the last 20 years, the Nasdaq-100 index grew about 15 times. Not bad at all. But here's what's crazy. Nvidia exploded 750 times. Apple gained 183 times. Amazon? Up 126 times. And even giants like Microsoft, Alphabet, and Costco returned 20-30 times. This shows that while index investing offers broad exposure and steady gains, informed investors may also consider watching and selectively investing in individual top performers, especially if they believe in their future growth. Final takeaway 1. Don't bet against innovation. Peter Lynch. The Nasdaq-100 reflects where the world is going, not where it's been. It's a high-growth index led by the most innovative companies on the planet. Final takeaway 2. Time in the market beats timing the market. Warren Buffett. If you had simply held the Nasdaq-100 for 10, 20, or 30 years, your returns would have compounded dramatically. Long-term patience is often your biggest edge. Final takeaway 3. Risk comes from not knowing what you're doing. Warren Buffett. Educating yourself, like you did with this video, turns volatility into opportunity. The more you understand the Nasdaq-100, the better you can harness its power. Final takeaway 4. Diversification is protection against ignorance. Benjamin Graham. With just one ETF like QQQ, you gain exposure to 100 of the largest, most liquid, non-financial innovators in the US, a built-in diversification strategy. Final takeaway 5. The trend is your friend. Jesse Livermore. Tech and digital transformation are long-term megatrends. The Nasdaq-100 has been, and likely will remain, a leader of that trend. Thanks for watching. If you found this video helpful, don't forget to like and drop a comment below. We'd love to hear from you. Subscribe for more insights on investing smart, growing wealth, living wisely, and walking with purpose. See you in the next video.